Bitcoin reaches a new all-time high. What's the real reason behind it? U.S. debt spiral threatens the economy, but bolsters Bitcoin's position to overtake gold's market cap. Spot trading hits new all-time highs, and Arizona Senate considers adding Bitcoin ETFs to the state's retirement portfolio. Hey, everybody, welcome back to Crypto Daily. So took a couple days off. As you guys probably heard in the last episode, my throat was not doing well, catching up from a cold. So finally feeling better, and hopefully my voice sounds better than last time. I'd say I'm probably about 90% recovered. What's also recovered is the Bitcoin price. So Bitcoin, we had kind of a nice little flash crash down to 60K, which I think freaked a lot of people out. But flash crashes are normal. Keep in mind, I think this is my fourth cycle now. I've been in this industry for almost a decade, so I've seen a lot of different types of cycles, and things happen during those cycles. And excuse me, one of the main things that you see happen is flash crashes during the bull run. So a lot of people call those, bull traps, various things like that. But, one thing you can be sure of is that if you have weak hands or if your conviction is a little shaky, it's really easy to get shaken out of crypto. It happens to a lot of people, and I've talked to plenty of those people. So my advice for those moments is, first of all, have high conviction in what you're invested in. So, if you're invested in Bitcoin, then you should probably have really high conviction in the future of Bitcoin. You shouldn't just be trying to swing trade it, because that's never really a great idea, in my opinion, with something like this. So high conviction lets you kind of, steady out those big roller coaster moments. So here's an article from ABC, and there's a few things in here that I thought were interesting, but the general thesis of it was that they were kind of evaluating what are the different reasons for Bitcoin hitting new all-time highs. So if you guys saw, Bitcoin hit a new all-time high just about 2 days ago, right around 69,420, which was kind of a fun meme. So there's a lot of different speculation about why this is happening. I think most of us pretty much just say that it's from the ETFs, which is generally where I fall. The ETF buying pressure is enormous. And I think that is the main driver of what's happening here. I also think we're just kind of due in the cyclical nature of crypto. We have these like 4-year cycles kind of where crypto goes down, goes up, and we're kind of back at that moment. The halving is almost upon us, and then combine that with all this ETF buying pressure, and I think people are just getting really excited about Bitcoin again. So a lot of people, being excited about halving, there's a lot of people that are not excited about it, or at least are saying that it's going to have a minimal impact. And that is necessarily true. Like over a long period of time, the halvings have less and less of an impact, since obviously, the amount of the decrease in the incoming supply is actually less every halving. So it actually makes sense that over time, the halvings have less of an impact. That being said, I still think the halving will have pretty dramatic impact on the market, just from a sentiment psychological point of view, as well as obviously the long-term demand supply shock of what that causes, and then obviously you combine it with the demand shock of ETFs, and I think that's pretty great. So put simply, these ETFs will allow ordinary investors and the uber rich to invest money into funds that have bought up Bitcoin and are holding it in custodians like Coinbase. So that's obviously something that we all know. It's something that we're seeing play out in real time with, BlackRock and Fidelity just kind of soaking up billions of dollars in assets under management for their Bitcoin ETFs. So I think that's just going to continue to happen. We're just going to continue to see more and more Bitcoin flow into those funds. They're going to have to buy at spot, and then they obviously have a ton of demand on the USD side. So there's a lot of people calling for a U.S. national debt death spiral, or a death spiral of the USD, essentially. And a big reason for that is there's a lot of info out there if you want to dive into this, but the national debt just continues to skyrocket, and with interest rates really high, that has only gotten worse. So chief strategist at Bank of America, Michael Hartnett, said the U.S. national debt is rising $1 trillion every 100 days. So the national debt is just up and to the right. It is the opposite of what you want to see for national debt. And there's a lot of speculation about what's going to happen next. A lot of people think we're going to hit like a deep recession or even depression type of era. As the economy kind of has to eat that debt, and the resulting nature of what happens is USD loses dominance globally. So, without getting too doom and gloom, I don't know what's going to happen, but I think owning, scarce assets is obviously a smart position. That's why, a lot of us hold Bitcoin. I'm sure watching this, I don't need to remind you of that, kind of aspect of holding, digital scarce assets. But BlackRock's IBIT, the largest new spot Bitcoin ETF, eclipsed $10 billion in assets under management. And Fidelity is at $6 billion since launching in January. So hasn't been that long, and these ETFs are growing enormously. We shared that there was this piece of data. There's about $100 billion in assets under management for gold ETFs. And Bitcoin ETFs are quickly kind of catching up to that. So I think that's going to be a really interesting thing to watch is like that moment that we see, Bitcoin ETFs, assets under management cross gold. That's going to be a big moment. And I've said multiple times, my price target for Bitcoin is that, I don't know if it's a year from now, 5 years from now, 20 years from now, but my long-term price target has always been that Bitcoin will eclipse gold's market cap. So that puts Bitcoin somewhere in the $400,000 to $500,000 range per coin. And that's always been my long-term target because I think Bitcoin is a superior store of value to gold. A lot of people also think that way. Nassim Taleb, I've read a few of his books. I'm sure many of you know of him if you're in the finance space. But he said he believes the U.S. economy is in a death spiral. As long as you have Congress keep extending the debt limit and doing deals because they're afraid of the consequences of doing the right thing, that's the political structure of the political system. Eventually, you're going to have a debt spiral, and a debt spiral is like a death spiral. So, obviously, someone to listen to when it comes to looking at historical frameworks for economies. I think he's generally a pretty well respected figure, also a little controversial. But like I said, I think a lot of us are looking at this debt rising fast, and we all kind of know that something has to happen. So, the lever has to break somewhere. Do we enter a recession? Does the Fed, start dropping interest rates? I think some probable combination of the two is likely. And overall, like I said, owning Bitcoin, probably a good idea in an environment like that. And I think you're seeing a rise in Bitcoin's price, obviously due to the ETFs, and then you've got the halvening, but now you've also got this global macro setup for Bitcoin. And I think just all three are pretty positive. So today, New York Community Bank stock was halted after crashing 42%. So, if you remember, we had like this whole banking crisis with SVB and other, kind of community or national banks that were having issues. So, with interest rates super high, these banks were not well positioned for, kind of the seesaw action to go from ZERP to, super high interest rates. So, banks are still hurting from this. And again, kind of tying into the last piece of news, a big reason for the Fed to actually do something and for something to change in terms of interest rates, which is ultimately going to impact, Bitcoin and other aspects of the market. Tether just broke $100 billion in market cap. So stablecoins just keep increasing over time. I remember a day when, stablecoins didn't even exist in crypto. And then, they came out, they were super exciting. And then slowly, you just kind of saw this, kind of slow adoption, and then boom, a massive rise in the use of stablecoins across the entire crypto space. I think you're just going to continue to see that. I think stablecoins have one of the best and strongest use cases when it comes to cryptocurrency. And, we've long been talking about the digitization of currency in general. And I think stablecoins are kind of at the center of that. So you're just, $100 billion is nothing. It's just going to keep growing, in my opinion. So Thorchain just had a massive proposal introduced. A lot of you guys know that I'm a pretty big investor in Thorchain, long-term believer in it since, before they even had a product released. But, the thesis behind it is, decentralized exchanges. And I think with everything that happened with centralized exchanges over the past couple of years, the thesis behind it has just gotten even better and stronger. Lending is a huge part of the crypto market, and we were just talking about stable coins. And Thorchain is growing their lending protocol. So just a little interesting extra piece of news that I wanted to throw in there. Arizona State Senate is proposing to add Bitcoin to their state's retirement portfolio. So obviously nothing yet here, and with legislation, it moves super slow. So this is just a proposal to basically look into it more with Bitcoin ETFs. So you're going to slowly keep seeing interest rise, and I think these are kind of the holders that you want to see enter the Bitcoin market. They're the kind of forever holders, the these pension funds and large, you know, kind of government level funds where they basically just buy assets and hold them forever. So seeing that kind of capital flow, I mean, there's trillions of dollars of that capital. Seeing it flow into Bitcoin is really good for the Bitcoin price, as I'm sure you can imagine. So Bitcoin spot trading hits a 12-month high. So retail interest, they're saying, is part of the surge. I also think a big part of the surge is actually just BlackRock and Fidelity just trying to eat up spot Bitcoin. I know there's a lot of memes out there about that, but you know, I think you're just going to continue to see a rise in the amount of spot trading that happens. And like I was saying, I hope more of that happens on DEXs. So last piece of news is a funny one. Meme coins are exploding right now. So there were a few funny ones like, you know, misspelled names like Joe Biden and Elon Musk, and one for Trump as well, where, you know, you had these misspelled names, these coins came out and then did like a 2500x. So you're going to see this. This is a natural part of the crypto cycles. As I said, I've seen it many times where you just have these random tokens come out of nowhere and start exploding in price. So I think that's just going to continue to happen as this market heats up. There's a lot of capital sloshing around in crypto. As Bitcoin goes up, that capital kind of flows around into altcoins and even some of these meme coins as people look for quick profits. So stay vigilant out there. The market is crazy. You're going to have more flash crashes. You're going to see meme coins, you know, going up 2500x. That's a part of crypto. So like I said, have a high conviction bet. You know, mine are, you know, Bitcoin and RUNE are two of my high conviction bets. And, you know, I won't get shaken out by a flash crash, you know, with that level of conviction. So that's one key piece of advice I have after seeing so many different cycles. But that's all I got for today. I will see you guys in the next one.